Hi everyone, this is the live top-down analysis trade review of this week. Before I start, make sure to like and subscribe to the YouTube channel. So last week, I talked about price. We're expecting the daily fair value gap. So I told you guys that if price were to stay above the daily fair value gap, then I will be anticipating higher prices for price to run the buy side liquidity. But mostly, if price were to stay above, not trading below the daily fair value gap, that should be my price. But at the same time, I told you guys that if price were to trade below the daily fair value gap, then I will be anticipating a retracement down to the other block and so this new week opening gap. So last week, price opened on Monday. Price stayed above the daily fair value gap, which if the trend were to continue to trade higher, then I'll be looking for higher prices. But on Tuesday, price traded lower, traded below the daily fair value gap, which means I will be anticipating lower prices. And I want to see price respect new week opening gap, use it as a resistance area to trade lower and to use any 4 hour and 1 hour point of interest to trade lower. And how low I want to see price trade to should be the other block. On Tuesday, price traded through the daily fair value gap. On Wednesday, price did a retracement to a new week opening gap. Respected the new week opening gap, traded lower, and on Thursday, price traded and closed below the daily fair value gap. On Friday, price did a retracement back to the daily fair value gap. On the 1 hour time frame of the dollar index, on Monday, you can see the consolidation from the opening price. Price stayed within this price range. There wasn't, I can say, a shift of structure to verify that price is trading higher. Although price traded higher above the new week opening gap, retraced to the new week opening gap, but price did not go higher than on Friday's high. From the opening price, price did not trade above this high. Price stayed below the high, consolidated. On Tuesday, during the London section, price retraced lower, took out Friday's low. You can see the price is below the daily fair value gap, which I explained. As soon as price gets below the daily fair value gap, look for an area where price will resist from. Once it trades to that area, which mostly you should pay attention to the new week opening gap. When price trades below the new week opening gap, we want to see a retracement to the new week opening gap and to a 4 hour or 1 hour point of interest, which in this example is a 1 hour point of interest, which is another block. But you still need to take note of the fair value gap. As long as price is still below the new week opening gap, there is still a chances of price trading lower. Price stayed below the new week opening gap, respected the other block, did an internal shift, retracement, other block. This was on Wednesday. On Wednesday, price retraced to the other block, and on Thursday, from Thursday opening price during the London section, price retraced lower, taking out Tuesday's low. After the run on Tuesday's low, retracement, daily fair value gap, and price traded lower. You can see how price used the daily fair value gap as an inversion fair value gap to trade lower. Now, when price was trading lower, I had a full confidence in price going for the other block. When I was holding up my trade, trading lower, I didn't take partial the second time, only took partial once as soon as price trades below the daily fair value gap. I held lots of position anticipating price to trade to the other block, and my stop was at this high, which you can see price did a retracement and I was stopped out. I was still in profit when price stopped me out, but having that bias of price trading to the other block. Even if price already came close to the other block, I was supposed to take most of the position, seeing this retracement, going back to this other block. I was supposed to take a little more portions of the trade, but I still held up the trade till I was stopped out. And I didn't trade directly from the dollar index. I did take the trade from GBP USD, which when I get to that currency, I will explain more on it. On Thursday, price from the other block, and on Friday, price opened, traded to the other block. They felt like it was respecting the other block to trade lower, but price did a retracement, took at the high, and so far Friday just did a few up and down moves, staying within Thursday's range before the closing price of the week. So you can see how price traded to those points of interest in which I pointed out last week, how price were expected the new week opening gap traded below the daily fair value gap, used it as an inversion fair value gap to trade lower. So whenever I give out those bias on where I'm currently anticipating price to trade week to and what are my idea going in the week, you just need to pay attention to these points of interest in which I'm pointing out. Daily fair value gaps, daily order block, new week opening gap. Those are areas where price will be referencing to whenever price is ready to trade to a draw on liquidity. Which this week draw on liquidity is the other block, which price did not trade to the other block. It only traded below the daily fair value gap, and so far price have stayed below the daily fair value gap. On the daily time frame of Euro USD, last week I talked about price retracing to this other block, which was the overall bias because if price were to trade below the daily fair value gap, then I will be anticipating higher prices on Euro USD, just like how I explained on the live top-down analysis. So in the live top-down analysis, I say that price is already above the daily fair value gap, and if this were to lead to a continuation, we want to see price use the daily fair value gap as an inversion fair value gap to trade higher, which on Monday price retraced to the daily fair value gap, respected it. Tuesday price traded higher. Wednesday price kept the same bias, traded higher again, but stayed inside Tuesday's range. But on Thursday, price traded higher to the other block. We expected the other block, but traded above the consequence encouragement level of the other block, traded above the mid range of the other block. And on Friday, I was still anticipating higher prices for price to run the buy side liquidity because looking at dollar on Thursday, I was still anticipating lower prices to trade to the dollar order block, so the dollar index order block. So I was still anticipating lower prices. While on Euro USD, I was still looking at price running out the buy side liquidity, which I did take a trade, but the trade mostly spent most of its time moving between profit and my stop loss level, but I didn't get stopped out from the trade. Presently traded. I was still in losses when I closed the trade before the closing of the week. But looking at the price using this daily fair value gap as an inversion fair value gap to trade higher, you can still point out multiple opportunities for you to take advantage of as long as you stick to the idea and pay attention to how it's correlating to the dollar index. On the 1 hour time frame of Euro USD, from the opening price on Monday, price traded above the new week opening gap, retraced to the daily fair value gap, respected the daily fair value gap, traded above the new week opening gap. Now, this was supposed to be the first entry from the fair value gap and stop below the swing low, but I didn't take this first entry. I was still looking for more confirmation, probably because the dollar index haven't traded below the daily fair value gap, and I want to see that correlation before actually taking the trade. So on Tuesday, when price traded higher, which means price would have traded lower on the dollar index, when price traded below the daily fair value gap on the dollar index, leading to these higher prices on Euro USD. A retracement, my first entry was from this other block, which I was stopped out before price respected this other block, used it as a support area to trade higher. And this was my first trade, which I was stopped out. As you can see clearly, I was stopped out. And it was posted on the Signal group for those in the Signal group knew that we took a loss from this setup. After price stopped me out, respected the other block below, price did an internal shift, retracement, other block. This was my second trade, which was at the other block. I didn't use the fair value gap because I didn't get much of a risk to reward for price to trade to the other block because this was my closest draw on liquidity from my entry level, which is the next draw on liquidity I want to see price trade to. And it was close to this new week opening gap. It was close to the new week opening gap. Retracement, I respected the other block, traded higher to the other block. So this was the trade and it was posted on the Signal group. If you want to have access to the Signal group, you can check the link in the description and use my Telegram contact to contact me direct if you want to have access to the Signal group because that's the only way for you to take advantage of my own personal trade setup. And this was a 2.6 trade, a 2.6 hour trade. Price respected the other block, traded higher. As soon as price traded the New Week opening gap, I was still looking at dollar index to see if there's any chances of dollar index still trading lower, which there was still chances because price haven't traded to the dollar index or the block. So price trade higher. I was looking at price respecting this other block to run to the buy side liquidity. That was why on Friday I took a buy. Price retraced to my entry, respected my entry, but price did not hit TP. I think price was just moving between below my entry, above my entry before price closed below my entry, which was around, I can say, let's just complete it to a minus 0.5 hour trade. This was a minus 0.5 hour trade, and this was a 2.6 hour trade. And the first trade which I took, which I was stopped as at a minus 1 hour trade. Now, the reason I'm pointing out the specific trades I do take is because I want to have more transparency to the trades I'm taking advantage of for you guys to have more details on the trades I'm taking advantage of on the Signal group. The trade I'm posting on the Signal group, I want you guys to have more knowledge on why I'm actually taking those trades and what was my thought process before sending the trades to the Signal group. On the daily time frame of GBP USD, last live top down analysis, I talked about price trading higher to this daily fair value gap. I told you guys that price already above this daily fair value gap. There's still a chances of price trading higher to the daily fair value gap. And if the dollar were to align with that idea, I'll be taking advantage of the trade setup. So on Monday, price traded higher a little bit, taking out Friday's high. Tuesday, price did a retracement to the new week opening gap. Price did not respect the new week opening gap, traded lower to the daily fair value gap. And it was aligned with the inversion fair value gap. So it's a high probability daily fair value gap. And that was actually when I took advantage of my trade because it was now aligned with the dollar index. And I'm still looking at price supporting from the daily fair value gap. So I can say this is a high probability setup for you to look for a buy for price to trade higher. Which on Wednesday price did the shift in structure, on Thursday price traded higher, and on Friday I was still holding up to the trade, which I've taken most of the position out, which was posted on the Signal group, but we were still holding up to some trades before the retracement. But we didn't price did not stop us out at break even if we're already locked down around 2 hour already. Well, most of the position were later close to the closing price on Friday, but price came close to our take profit, but because I was still looking at dollar to trade lower, so I didn't tell you guys to close all the position. I only told you guys to close most of the position. And on Friday, retracement back to New York opening gap, respected New York opening gap, traded back to Thursday's range. On the 1 hour time frame of GBP USD, on Monday, price traded higher, took out Friday's high, did a retracement to the New Week opening gap, respected the New Week opening gap, traded higher, came close to Monday's high, but did a retracement. Now, during this time, the GBP USD is not correlated, it's not fully aligned with the dollar index. And mostly for the specific trades I do post on the Signal group, I must wait for that alignment before actually taking a trade. So on Tuesday, when price traded lower on the dollar index, seeing the GBP USD trading lower did not align with the bias. So I didn't take advantage of this setup when price did this shift after trading to the new week opening gap. I was still looking for that clean alignment before actually taking the trade. Though I did pay attention to this other block, seeing on how price will respect the other block. If I were to see an internal shift before price trading higher. But price traded lower to the daily fair value gap, which I was paying attention to, the discount daily fair value gap. Respected the daily fair value gap on Wednesday, did the shift in structure. A retracement on Thursday to the other block. Price respected the other block during the London section so you can use your intraday setup, your scalping setup, or the 5 or the 3 a.m. to the 4 a.m. setup to take advantage of this trade, trading higher. Price traded higher, came close to the take profit. You can see price came close to the take profit, what I was talking about on the daily time frame. Price came close to the take profit. I told you guys to close half of your position and wait for price to take profit and place a stop at the entry level, which on Friday, when price did the retracement back to the on Thursday's range, price came close in stopping us out where we already locked in 2 hour because this was above 4.2 hour already before taking half of the position. Price came close, but it didn't actually stop me out because I was still paying attention and I was still holding up to the trade. Price did retracements, and finally, price closed, locking in a total of 3 hours from this trade. Now, looking at this price action, looking at how Friday did trade, what I mostly pay attention to was the fact that price did stay above this fair value gap. Price stayed above this fair value gap and stayed above the new week opening gap. The fact that price is still above this new week opening gap, even if Friday did trade a little bit, I can say few consolidation. I can say it's a seek and destroy day if you were to trade it from a daily perspective, looking for those 5 minute scalping trades. This would be a seek and destroy day. But the fact that price stayed above the new week opening gap, there was still chances of price trading higher. But I would still advise that you wait for that correlation to the dollar index before actually taking a trade. On the daily time frame of USD JPY, last drop-down analysis, I anticipated higher prices for price to respect the other block, but I want to see price run the buy side liquidity, depending on how the dollar is correlated with that idea. So on Monday, Tuesday, when price was fully aligned with that idea, I was looking for higher prices for price to run the buy side liquidity. After price took out the buy side liquidity, price did a 1 hour shift in structure, which was aligned with the dollar index for price to trade lower. And I took a sell, which I was stopped out on Wednesday when price took out the equal highs on the USD JPY, running out the buy side liquidity. On Thursday, price did a retracement back to the range, and on Friday, price traded lower to the new week opening gap. So I did took a loss on this sell, but after that, I didn't take any trade because I was still looking for more confirmation, at least to see a swing high before actually looking for a sell for price to trade lower. But there was still day trading ideas inside the price action on Friday for price to trade lower if you were to use the 5 minutes or lower. If you were to use the idea from the 1 hour and the 5 minute, there was still a lot of areas for you to take advantage of the sell on Friday, which the sell on Friday did lead to the retracement to the new week opening gap. On the 1 hour time frame of USD JPY, on Monday, price traded higher, traded above the new week opening gap, which on the live total analysis, I talked about price retracing to the new week opening gap and we're expecting it on Monday. That there's the high probability chance of price going for the buy side liquidity. A retracement, new week opening gap respected the new week opening gap, price traded higher to the buy side liquidity. At this time, I was looking for higher prices, which many ways for you to take advantage of the setup is through the 5 minutes once it's aligned with the 1 hour. As long as you have a bias, whenever the 1 hour is aligned with that bias and the 5 minute is aligned with the 1 hour, those are high chances for you to look for your trades. So on Monday, price took out the buy side liquidity. On Tuesday, price did the shift in structure, retracement to the other block, which was aligned with the dollar index. Took a sell for price day retracement, and I was stopped out at this high. Price traded higher, took out the buy side liquidity, did a shift in structure on Wednesday. Now, on Wednesday, I didn't take advantage of this trade because I was still looking for price to at least see a daily resistance to trade lower because there might be a chances of price running at this high before actually retracing. So I didn't take advantage of this trade. I was still waiting for the candle to close, and I want to see price to run previous day high, 1 hour shift in structure before actually taking the trade. So price failed to run the high, but respected the other block and traded lower. But after the candle closed where there was a swing high, I was looking for an entry, but I was paying attention to this other block and the fair value gap close to the other block. That was the area I was looking for price to retrace to before actually taking the sell for price to retrace to the new week opening gap. And that was my trade idea. Price came close to the entry before actually dropping lower. Second entry for you to take advantage of should be this other block, but it was close to the new week to the week closing, so I didn't take a trade. I just watched through price for price to retrace to the other block. And you can see how I came about not taking any trade from the USD JPY this week. It was because when price did the shift in structure, it wasn't fully aligned with the dollar index. I was waiting for those right confirmation before actually taking the trade. When price was fully aligned, price did not retrace to my entry because I was looking at this high as a liquidity for price to run through because it was close to this high. And if this were to retrace to run this high, I was still anticipating price to run this high before actually dropping. Which price did run the high, but as soon as price took at the high, it traded lower. My idea was that if price were to run the high, the fair value gap should be the resistance area for price to trade lower, and if price were to trade above to reach the other block, then that should be my entry for price to trade lower. And you can see how price came close to my entry and traded lower. Now, there might be some chances that price did miss our entry, which if you were in the signal group, you can see that there's some trade where we did miss those trades because price did not retrace to our entry. That's why I told you guys to take advantage of the fair value gap and to take advantage of the lower time frame. Because at this point, the 1 hour is fully ready to expand lower as soon as its price took out Thursday's high. After price took out Thursday's high, which is this equal high, lower time frame, 5 minutes, look for your sell for price to trade lower. Which on the 5 minutes you can see the setup. After price took out the buy side liquidity, you can see the run on the buy side liquidity, shift in structure, retracement, other block, respected the other block, traded lower. This is how to align your lower time frame with your higher time frame. You're looking for those scenarios where the 1 hour is ready to expand after a run on liquidity. With the idea of the power of three, here's the opening price. From the opening price, price traded higher, took out a buy side liquidity. After a run on the buy side liquidity, led to the lower prices for price to trade lower. So that is it for this week. See you guys in the next video.